All right, today we're going to look at the crypto market, but probably not in the way you're used to. We're talking about the inhabitants of Bitcoin Island. Think of it as a complete liquidity ecosystem. Let's dive in.
So I want you to do something for me. Forget the charts, forget the order books, just for the next few minutes. Instead, I want you to picture the entire crypto market as this single wild island. And I'm not talking about some chill tropical paradise either. This thing is way more dynamic, way more live.
So this island is this bustling, super volatile financial ecosystem, and it's surrounded by this huge Bitcoin ocean. Now, what's the ocean? Well, that represents all the capital, all the money that's available for trading. And the constant churning of this ocean, the waves, the tides, that's what drives all the action on the island.
So, what keeps this whole island from just drying up and turning into a desert? It's one word: liquidity. Think of it as the ocean's water itself. It's the absolute lifeblood of this ecosystem. Without it, everything just grinds to a halt. So the real question is, who are the inhabitants, the creatures, that are actually creating this lifeblood?
Okay, first up, let's talk about the ones who really stir the pot. These are the primary drivers of that immediate, rapid change. They're the creatures making the waves, creating all that chop on the ocean surface. We call them the volatility pack.
So let's kick things off with the smallest, but you could argue the most impactful inhabitant on this entire island, the mouse. Now, these are your classic short-term speculators. They are absolutely not here for the long haul. It's all about quick, aggressive in-and-out trades. So what's the mouse's secret weapon? It's extreme leverage. We're talking sometimes over 100 times their capital. Yeah, 100x. This is what makes them the single biggest driver of volatility. You know those huge, lightning-fast price wicks you see on the charts? That's the mouse at work. It is pure, high-risk, high-impact action.
All right, so the mouse doesn't hunt alone. Joining it in this pack, we have the fox and the wolf. Think of the fox as your high-volume day trader, just constantly moving in and out all day long. The wolf, a bit more tactical, more of a market skimmer, always hunting for specific little inefficiencies it can exploit. The key thing is, both of them are super short-term focused, and they really do act like pack hunters. And here's the thing, they don't just ride the waves, they help create them. By taking these big, focused positions, they can actually kickstart a price movement. And what happens next is crucial. When those super leveraged positions eventually get wiped out, it triggers this cascade of liquidations. It looks violent, and it is, but it's also a necessary mechanism. It injects a massive burst of liquidity right back into the ocean, clearing out all those imbalances.
So if you look at the whole volatility pack, you can see they thrive on high leverage and they create a ton of volatility. I mean, the mouse is just in a league of its own with a 9 out of 9 impact score. But the fox and the wolf, they're right there behind, driving that constant churn. But an ocean that's just chaotic waves all the time, that's not sustainable. So to counter all that chaos, this ecosystem needs a stabilizing force. And that's where our next group comes in. Let's talk about the middle ground stabilizers.
Right. Because every ecosystem needs balance. These next inhabitants, they occupy that really crucial middle ground of the island's economy. They aren't the ones causing those violent splashes, but they're not the deep, slow currents either. Their job is to provide a calculated, persistent flow of liquidity.
And first up in this group is the Wolverine. This creature is all about strategic hedging and trading. They're known for being really calculating with their risk and for sticking to their positions with a ton of persistence. This provides a really steady flow that actually helps dampen the extreme volatility being kicked up by the mice. And how do they do that? Well, they use much more moderate leverage, usually somewhere between 3 and 10x. This is a huge difference, and it allows them to stay in the game way longer. They offer this continuous bid and ask presence that ends up acting like a powerful shock absorber for the whole market.
Okay, next up we've got the rhino. The rhino is this powerful, super-focused creature that really embodies trend following. Now, they don't start the trend, but once a direction is established, oh boy, their huge positions are used to confirm it and accelerate it, which in turn draws even more participants into the ocean.
So you see how these two stabilizers bring balance, right? The Wolverine offers this two-sided flow that actually reduces volatility, while the Rhino adds this deep, directional liquidity that allows for those sustained multi-day movements. They really are the essential bridge between the chaos and the stability.
All right, and that brings us to the final group. We're going down to the bedrock of the entire island now.
This is the provider of the deepest reserves, the ultimate source of stability in the whole Bitcoin ocean.
It's time to meet the elephant. This represents your massive institutional or corporate players. These guys have a really long-term macro bias. Their sheer scale means that every single move they make has to be conservative and calculated. They are not chasing quick spikes.
Yeah, their goal is just fundamentally different from everyone else's. They're engaging in large-scale OTC hedging, and just because of their size, their actions inherently shape the market's underlying tone. But how do they do this without creating massive waves like the mouse does?
Well, the answer is over-the-counter, or OTC trading. So instead of dumping these huge orders on the public market for everyone to see, they execute them privately, behind the scenes. This action is kind of like a deep-water well. It can absorb massive shocks by removing or adding huge blocks of assets without anyone seeing a splash on the surface. And this provides the foundational liquidity pool for the entire ecosystem.
So when you put it all together, what do you get? You start to see that Bitcoin Island isn't really defined by any single animal. It's this delicate, almost symbiotic financial ecosystem, where the real liquidity comes from the super complex interactions of all its inhabitants.
Right. Each group provides a different but absolutely essential type of liquidity. You've got that volatile, surface-level churn coming from the mouse, then you get directional momentum from the fox and the wolf. The Wolverine and Rhino, they provide that stabilizing mid-level flow, and it's all built on the deep, fundamental reserves supplied by the elephant.
And why does this matter to you? Well, because understanding this diversity is everything. When you see a sudden, sharp price wick, you can now think, that's the mouse. A strong, grinding trend, that might be the Rhino taking charge. It lets you see the story playing out behind the price action, not just a random chaos.
And that leaves us with one final thought. This whole model beautifully illustrates a healthy functioning market. But it also kind of begs the question, what happens to the ocean when this ecosystem gets out of balance? What if there are too many predators and not enough stabilizers? It's definitely something to think about.